The dream of owning a home is powerful. It is a dream shared by many. In the quiet countryside, this dream often seems distant. Financial hurdles can appear too large to overcome, yet there is a special kind of help available. This help comes from the United States Department of Agriculture. USDA loans are designed for rural and suburban home buyers. They offer a unique opportunity. These loans can make homeownership a reality. They often require no down payment at all. Imagine buying a home without saving for years for a deposit. This is what USDA loans can offer. They also come with interest rates that are often lower than many other types of loans. This makes the monthly payments more manageable. It opens doors for families and individuals who might otherwise be unable to buy. The USDA's mission is to improve rural America's economy and quality of life. These loans are a vital part of that mission. The beauty of these programs lies in their accessibility. They are not just for farmers. Many people living in designated rural or suburban areas can qualify. The definition of rural is often broader than one might think. Many small towns and areas outside major cities are eligible. This opens up a vast landscape of possibilities, a chance to find a peaceful place to call one's own. So, let us explore this fascinating world of USDA home loans. We will look at how they work and who can benefit from them. What are these USDA loans? They are mortgage loans offered by the USDA or guaranteed by the USDA through private lenders. This guarantee makes lenders more willing to offer good terms. The main purpose is to help lower and moderate income households own adequate and modest homes in eligible rural areas. This program helps to populate and sustain these vital regions. There are three main types of these helpful loans. First, USDA guaranteed loans. Private lenders provide the funds, and the USDA guarantees a portion of the loan. This reduces the lender's risk and encourages them to offer favorable terms like no down payment and lower interest rates. Next, USDA direct loans. The USDA itself acts as the lender for low and very low income applicants who cannot get credit elsewhere. Interest rates can be very low and payment assistance is often available to reduce the monthly mortgage payment. Finally, Section 504 Home Repair Loans and Grants. These help existing low-income homeowners in rural areas repair or improve their homes. Grants are available for elderly, very low-income homeowners and do not need to be repaid. This program helps preserve rural housing and ensures homes remain safe and livable. To receive a USDA loan, certain conditions must be met. These conditions ensure the loans help the intended people and communities. One of the most important factors is income. Applicants must have an income that falls within certain limits, typically set at or below 115% of the area median income. For direct loans, the income limits are even lower. Another crucial requirement is the property's location. The home must be in a USDA-eligible rural area. Many small towns and suburbs on the outskirts of larger cities qualify. The USDA website has eligibility maps to check specific addresses. Beyond income and location, other criteria apply. Applicants must be U.S. citizens or permanent residents with a dependable income and a reasonable credit history. While USDA loans are flexible, a good credit score helps. The home itself must meet certain standards. It must be a primary residence, not an investment or vacation property. The property must also be modest in size and design, meeting basic safety and livability standards. The advantages of a USDA loan are significant. They make the path to homeownership much smoother. The zero down payment requirement removes a major hurdle for many aspiring homeowners. With a USDA guaranteed or direct loan, 100% financing is often possible. Low interest rates are another key attraction. Because the USDA guarantees or directly provides these loans, the risk is lower, allowing for better rates. A lower interest rate means lower monthly payments and less interest paid over the life of the loan. This makes homeownership more affordable and sustainable. USDA guaranteed loans often have more flexible credit guidelines compared to conventional mortgages. This provides an opportunity for individuals who may have faced financial challenges or are still building their credit profile. Another important benefit for guaranteed loans is related to mortgage insurance. USDA guaranteed loans do not have PMI. Instead, they have an upfront guarantee fee and an annual fee that is typically lower than PMI. For direct loans, there is no ongoing mortgage insurance cost. This difference can save homeowners a considerable amount of money each month. Let's delve deeper into the specific types of USDA loans. The USDA guaranteed loan, or Section 502 guaranteed loan, is the most widely used. Private lenders issue the loan, and the USDA provides a guarantee to the lender for up to 90% of the loan amount. This significantly reduces the lender's risk and encourages them to offer 100% financing. This program is for moderate-income households. The guaranteed loan can be used to buy, build, or improve a home, or to refinance an existing eligible loan. Interest rates are fixed, providing stability in monthly payments. Borrowers work directly with USDA-approved private lenders. The USDA's role is to set the program guidelines and provide the guarantee. Then we have the USDA Direct Loan, or Section 502 Direct Loan. The USDA itself is the lender for low and very low-income individuals and families who cannot obtain credit from other sources. Interest rates are often very low, subsidized down to as little as 1% in some cases. Direct loans can be used to buy, build, or repair homes in eligible rural areas. The loan terms can be up to 33 years, or even 38 years, for very low-income applicants. Applicants apply directly to their local USDA Rural Development Office. The application process for a USDA loan varies slightly depending on the type of loan one seeks. For a USDA guaranteed loan, the journey begins with a USDA-approved lender. These are banks, credit unions, or mortgage companies that have partnered with the USDA. The first step is to find such a lender. The lender will assess your eligibility, looking at income, credit, and other factors. They help prepare the application package. Once the lender approves the borrower, they submit the loan package to the USDA. The USDA Rural Development Office then reviews it to check if all program requirements are met. If everything is in order, the USDA issues a loan guarantee to the lender. For a smoother application, gather documents early, including pay stubs, tax returns, and bank statements. For a USDA direct loan, the process is different. Applicants work directly with their local USDA Rural Development Office. The first step is to contact the local office. Staff there can explain the program, provide application forms and guidance. They will determine eligibility based on income and other criteria. The application will require detailed financial information and information about current housing and needs. The USDA staff will process the application and make the lending decision. For Section 504 home repair loans and grants, the process also starts locally. Homeowners should contact their USDA Rural Development Office to learn about eligibility for loans or grants. The application will focus on income and detail the necessary repairs or improvements. The USDA will assess the need and the applicant's ability to repay a loan. If a grant is sought, age and income are key factors. Understanding the costs involved is crucial for any home buyer. USDA loans, while beneficial, do have costs. For USDA guaranteed loans, interest rates are set by private lenders but are often very competitive. Frequently, they are lower than conventional loan rates due to the USDA guarantee. The rates are typically fixed, providing predictable monthly payments. For USDA direct loans, the interest rates are set by the USDA and can be exceptionally low. The effective interest rate can even be subsidized down to 1%, depending on the applicant's income and eligibility for payment assistance. Closing costs are another part of buying a home. USDA loans do have closing costs, just like other mortgages. However, borrowers can sometimes finance their closing costs if the appraised value of the home is higher than the sales price. Seller concessions can also help with closing costs. The seller may agree to pay a portion of the buyer's closing costs. USDA guidelines allow for seller concessions up to a certain percentage of the sales price. For USDA guaranteed loans, there is an upfront guarantee fee that can often be financed into the loan. There is also an annual fee paid monthly. These fees fund the program and ensure its continued availability for future rural homebuyers. So, we have explored the landscape of USDA loans. We have seen their purpose and their many benefits. The question remains, is a USDA loan the right choice for you? If you dream of owning a home in a rural or suburban area, and if your income is within the moderate to low range, then a USDA loan could indeed be an excellent option. The zero down payment feature is a powerful attraction. It removes a common barrier to homeownership. The low interest rates and flexible credit guidelines are also compelling. They make buying and owning a home more affordable, especially for those who might not qualify for other loan types. The support for rural communities is another positive aspect. By choosing a USDA loan, you are also participating in a program that strengthens the fabric of rural America. However, there are factors to weigh carefully. The property must be in an eligible area. Income limits must be met. The home must be your primary residence. These are not investment loans. If your income is too high, you will not qualify. If the home you desire is in a major urban center, this program is not for you. Ultimately, the best way to determine if a USDA loan is right is to do more research. Speak with a USDA-approved lender or contact your local USDA Rural Development Office. For many, these loans have been the key to unlocking the dream of a home in the heart